What's going on YouTube? In today's video, we're going to be going over the Bay Area real estate market statistics for August of 2022. Now, if you've been in tune with the real estate market for the past few months, you've known that there has been a significant market softening since the summer. And we're seeing that interest rates are increasing, buyers are not buying as much as they were before, prices have fallen, and we're seeing more properties stay on the market for even longer time. So with this video, we're going to be looking at the actual statistics that we get from the actual MLS to see if it's a good time to buy or sell your home here in the Bay Area. We're going to be going over the statistics for Santa Clara County, San Mateo County, San Francisco County, Alameda County, and Contra Costa County. We'll be looking at single family homes and condos and townhouses to see exactly what's going on in the market. So without further ado, let's hop on in. Alright, so right now we're looking at Santa Clara County single family homes, and this is the average days on market and sales to list price ratio. So if this is your first time watching one of these videos, I'm going to be explaining exactly what we're looking at here. So the first one is the days to sell, right? So DOM stands for days on market, and that's the time from when an agent puts a property on the market to when it actually goes under contract. So as an example, let's say an agent puts the property on Friday, and a week later a buyer presents an offer and the seller accepts it. It goes pending or under contract. It doesn't mean the property is sold just yet, but at least it's off the market, and the DOM or the days on market freezes. So in this case, if the property went listing on a Friday and it went under contract the next Friday, then the DOM for that particular property would be 7 days. So the average here is throughout the entire Santa Clara County for single family homes. And we can see here that it's up to 21 days now. So that's a 7-day increase from what it was last month. Now we're seeing July data, and that's because with the MLS, they only show us data up to what we've already seen, right? We're in the early days of August right now. So right now we have the full data set for July, but we don't have August data just yet. So right now you can see, yeah, there is definitely a slowdown here. And the next one here is the sales to list price ratio. And that means what a property actually sells for relative to what it was listed for. So as you guys know in real estate, just because a property is listed for $1 million, it does not mean that that property will actually sell for $1 million. There are many factors that go into play here. Some agents list the property very low, knowing that the market price is higher. Some agents list the property at what they think market value is, and then many buyers compete against it and they overbid each other. So the final sales price is not the actual price the property sells for. And typically, as you can see in the earlier months of this year, we were hitting 115%, which meant that if a property was listed for $1 million, then it would sell for 15% more than what it was listed for, or $1.15 million. Right now, that sales to list price ratio has gone down quite a bit. So we're almost hitting, exactly what it's listed for. If you list a property for $1 million, yeah, you might be getting $1 million offer and you might be happy to take it before it keeps going down. So this right here, this trend of days on market going up, meaning it's taking even longer for properties to get under contract, and the sales to list price ratio going downwards, definitely indicates a market slowdown. And we're not surprised by that. So people aren't overbidding like they were before, and properties are sitting on the market even longer. Our next statistic is the months of inventory. So what this statistic signifies is if there were no new properties on the market, how long would it take to sell every single home on the market if we kept selling properties at the same pace we're selling right now? A low months of inventory means that your inventory will be picked up really quickly and there's no inventory left for everyone else. And that's usually a seller's market. When you have a higher months of inventory, it means more of a buyer's market because properties are just sitting there. So as we're seeing here, we're around 2.25 months of inventory. So it'll take 2.25 months to sell all the houses in Santa Clara County if we kept selling houses at its current pace. Again, this trend signifies a market slowdown, and the last times the months of inventory were this high was during peak COVID times. So number of homes for sale versus sold, again, another indication of how well the market is doing. We're seeing here that there's way more properties that are on the market than properties actually being sold. This red bar signifies how many properties are currently on the market, and the green bar signifies how many properties were actually sold that month. Now remember, just because you have 643 that were sold this month, that usually means that these properties were put under contract the previous month, because it takes around 30 days for when a property goes under contract to when it actually gets sold, with all the due diligence and getting loans and all that stuff. And here you can see that a lot of sellers realize that there is a market slowdown, so they want to put their properties out on the market as soon as possible. And they're just trying to catch that last wave before we go into a quote unquote crash. So yeah, you can see here, way more properties on the market, much less properties being sold. So this is really, truly a buyer's market as far as the Bay Area is concerned, because we have not seen this kind of a shift between properties on the market and properties being sold in such a very long time. If you look at the sales price over time, we can also see that this number is slowly trending downwards. So people were overbidding and they're paying. The peak craziness was at April of 2022, and then slowly, it's going down, down, down. Don't worry about this number right here. That kind of shows that numbers are going up because again, this is early August, so this is not a complete data set. It's only for the past few days of closing sales. Okay, next we'll look at condos and townhomes. So here, same thing. Our days on market have skyrocketed a lot, and our average sales to list price ratio has gone down, close to 100%. So people aren't overbidding for condos, and properties are staying on the market for about 3 weeks. Our months of inventory have also increased here, although not quite as bad as it was back in peak COVID times. Back in COVID, like no one wanted a condo. Now, it's bad, but not as bad as it was during COVID. And same thing with the number of homes for sale versus sold. You have way more properties that are active than properties that are being sold. And your sales price over time is slowly decreasing here as well. Okay, next we'll look at Mateo County single family homes. And here, same thing. Days on market has increased by about 6 days on average. And your sales to list price ratio has gone down to 104%. Months of inventory have increased to 2 months. Number of homes for sale versus sold. You have around the same amount of properties that are on the market, but less properties that are being sold month over month. And your sales price over time is also decreasing very steadily. So now we look at condos and townhouses for San Mateo County. And yep, another big downturn right here on the sales to list price ratio, about 102% now. And your days on market have increased to 24 days. Months of inventory have increased to around 2 to 2.5 months. Your number of homes for sale versus sold have increased. Again, the spread has increased. We have more properties being left on the market and less properties being sold. Sales price over time, again, slowly decreasing since April. So now we look at single family homes for San Francisco County. And we can see here that, yes, this is dropping even in San Francisco County. Your days on market here have been relatively stagnant, 15 to 20 days. So not much has changed there. But this is very interesting. In April, we were seeing 120% for the sales to list price ratio. And that's pretty insane. That means that if you put a property in the market for $2 million, you expect to get an additional $400,000 to $500,000 above that price because people are just fighting over each other. Agents in San Francisco County were also notorious for pricing the properties way below, true market value because they wanted that competition. They wanted their listings to seem like they were a really good deal for people to fight out them later. But now you can see that that strategy is not working as much as well anymore. And now the sales to list price ratio is around 110%. So still pretty good, still above asking price, but not quite as high as it was in the past. Your months of inventory here, again, not super crazy compared to the other ones we've seen so far, but they are at relatively high points, just under 2 months. And home for sale versus sold, you have a lot of properties always in San Francisco that are being sold that just can't get off the market. So this seems relatively stagnant, right? The number of properties in San Francisco have stayed in San Francisco, but the number of properties that are being sold have not been keeping up. So, in April and May, there have been properties that are being sold, and now there's less and less and less. Checking out your sales price over time, we can see that this number is decreasing as well. Slowly, the pricing has, it's kind of weird. Like this pricing seems to be very similar to what we're seeing in Santa Clara County. So it's kind of weird that the price of San Francisco, which is notoriously a much more pricier market, is now getting down the same price as it is in Santa Clara County. All right, let's check out condos and townhouses in San Francisco. So we can see that here too, the sales to list price ratio has gone down to around 102%, and your days on market are now at 44. So buying a condo in San Francisco has been pretty rough. Or I guess owning a condo has been rough for the past 2 years. Ever since COVID, just people don't want condos, and your properties will probably sit there for a very long time before you can actually sell it. Your months of inventory here are about 4 months. So again, a very slow market relative to everything else. Still not as bad as COVID though. During COVID, we hit almost 9 months of inventory. And your number of homes for sale versus sold, again, this huge red bar relative to the green bar means that properties are sitting on the market and not being sold. Looking at the trends, it seems like they're going on step, right? There's no huge gap between properties that are going on the market and properties being sold. It seems to be just the same. As this goes up, but their gap is very high. And sales price over time seems to be relatively flat too. So I think the market for condos and townhouses were just really bad. So when the market has turned, nothing has changed here because it was already bad. Okay, Alameda County, single family homes. So for Alameda County single family homes, we are seeing the drop here as well. It's a nice straight line month after month. And now we're at 109%. And our days on average is about 18 days. Our months of inventory here have increased as well to 2 months. And the number of homes for sale versus sold has changed dramatically as well. Look at what it was about a year ago, right? We had so many properties that are being sold and so little inventory. So like in December, November, everyone was fighting over the same properties. And that's why these cities were going absolutely insane. But now the reverse has happened. People realize they're softening and now they're putting all their properties on the market right now, and less people are actually buying properties. Sales prices over time have also started to decrease since May. Condos and townhouses in Alameda County have a similar fate. Your average sales to list price ratio has gone down to around 102%, but your days on market have remained relatively flat. Months of inventory have climbed to 2.5 months, and your number of homes for sale versus sold have also been just split, right? Like you have so many more properties on the market now, and less properties are actually being sold here. So again, sellers are just desperate. They want to get their properties on the market right now. And we can see here that sales prices over time are slowly starting to decrease. Now I'll check out Contra, Costa County single family homes. And wow, you can see another sharp decrease here. We're at 102% sales to list price ratio. So properties here aren't selling quite as crazily as they were before. And properties are now sitting on the market for 20 something days. Months of inventory here, again, 2 months. Your number of homes for sale versus sold, again, are having that split where more properties are on the market and less properties are being sold. Sales price over time, again, decreasing. So we'll wrap this up with condos and townhouses in Contra, Costa County. Looks like we're at just under 102% and we have 16 days on market. We have around 1.75 months of inventory. And the number of homes for sale versus sold, again, more properties on the market than properties being sold. And wrapping up, seeing that your sales price over time is slowly starting to decrease. As we can clearly see, there is something going on in the market. Sellers are more desperate to put their properties out on the market before the crash happens even more. Fewer and fewer buyers are in the market because of higher interest rates. The stock market is going down, so their down payment money is kind of vanishing. I think a lot of buyers were also just tired. Tired of fighting really hard for several months and not winning a bid, that they're taking a pause on buying a property. So what does this mean for you? I think that if you're in a position that you want to buy a home and you plan on living in this particular home for 10 plus years, now is actually a pretty good time to start looking for properties. Because unlike what it was a few months ago, you can actually negotiate with sellers now. You can ask for contingencies. You can ask for potential seller credits if there need to be repairs. You can potentially even negotiate for a lower price point, all because there are fewer buyers in the market and sellers understand the situation. Now, some sellers may think that we're still back in March or April of 2022, but some sellers actually do realize that, look, we're in a current situation that we may not be able to sell our property for as much as we used to, and they might be willing to work with you. Again, if you have the means to sustain yourself and you can find a property that you plan on living in for the 10 plus years, I think now's a good time to go buy a property. However, if you're an investor and you're trying to buy speculative deals and you plan on flipping the property really quickly, you need to be a little bit careful because the market might continue to go down. On top of that, lending has increased. As a hard money lender, I feel heartbroken every time I have to tell someone that the rates are now at 10 or 10.5%, where just a few months ago, the rates were down to 8%. So it costs more to do deals, and when you sell the property in a few months, we don't know if the price goes down even further. So you might be selling your property at a loss after doing all this hard work. So be very, very careful if you're doing speculative investments like flipping a house. So long story short, no one knows what's going to happen with the market. Our price is going to continue to increase or decrease. We don't know, but we have to just plan for the worst case scenario and make sure you have multiple exit strategies. If you're selling a property, my thought is if you can hold on to the property longer, continue renting it out or just living in it without moving somewhere else, that's probably a better bet than putting yourself out in the market where the selling environment isn't as friendly to you as it was just a few months ago. You can potentially wait maybe 1 year, 2 years when all this blows over, then put your property on the market when it's super hot. It's a lot easier to do that versus trying to fight really hard right now to try to sell your property. Well, those are just my thoughts. I want to know what you guys think about the current Bay Area real estate market. Let me know your thoughts down in the comment section below. If you guys have enjoyed this video, I highly encourage you guys to subscribe and like the video to see more videos just like this one. And if you guys are interested in more real estate updates, then I highly recommend you check out this video where I talk about how the softening housing market is significantly increasing rents for tenants. Thanks for watching, guys. I appreciate you, and I'll see you next time. Take care.